This is your host, Stephen Sargeant, the Around the Coin podcast. You're in for a treat. We have Roberto Kafati. He is the CEO and founder of DEUNA. This is a payment infrastructure. They're taking AI agentic intelligence with their Thea platform. This conversation is all around payments, Central America, Latin America, North America. Roberto provides refreshing insights about the challenges with AI agentic intelligence. He talks about how you build trust with vendors and merchants that are powering the companies and stores that we interact with on a daily basis. He talks about his early crypto days back in 2015 and where he thinks stablecoins are going to integrate in his infrastructure and others as we continue on through the momentum built in the United States. This is a real life conversation with an entrepreneur that has a consultant's background and talks about the challenges and the resilience of building a payments infrastructure during the start of the pandemic. This is a conversation you're going to want to listen to. And check out Roberto and maybe me and maybe his team at Money 2020 in Las Vegas coming up at the end of October. Reach out to Roberto if you love this podcast as much as I did. Welcome to another edition of Around the Coin podcast. We have live from New York City, Roberto Kafati. You are the founder and CEO of DEUNA. Roberto, you have an interesting background. You went to school and you've learned so much, but I want to touch a little bit about your early career. You worked with one of the biggest consultancies, McKinsey, in Central and South America from 2017 to 2020. What were some of the key learnings from your experience there?
That's a great question, Stephen. While I was at McKinsey, what I realized was that payments was outdated. That payments was looked at as a cutting center instead of a growth opportunity or as a growth driver. And that a lot of the largest merchants were having difficulty enabling their online channels and leveling the playing field with the largest aggregator and marketplaces. And payment infrastructure was at the center of it all. And unlocking payment infrastructure, advanced payment infrastructure could be the key for allowing these merchants not only to compete on an equal footing with the largest players out there, but also to deliver a magical user experience to the end consumer, and also to unlock a lot of different revenue and growth opportunities that otherwise would have been missed. And so McKinsey really opened my eyes by allowing me to work with the largest retailers, the largest financial institutions in Latin America, and help them drive transformation, digital transformation around payments.
You know what's interesting? Before we press record, you were telling me that you got into crypto a little bit earlier than I think most people, including myself. 2017, I think, was really an eye-opener for a lot of people that were in traditional industries, financial services, even in compliance, cybersecurity, investments. You got in 2015. Talk a little bit about what the industry was like at 2015. Who were some of the major players that you're having discussions with? What were your first thoughts about, crypto? Was it Bitcoin for you first? Was it Ethereum that got you interested? Tell us a little bit about your early days in crypto.
That's a great question. So Ethereum got me into it first, thanks to one of my best friends from high school back in Honduras, and he was a core developer at Ethereum. So he got me as early as 2015. I soon started to play around a lot with different layer 2 coins on Ethereum, and also got very involved with Bitcoin earlier on. The largest players were the developer groups at that moment in time, as well as different exchanges that were coming up. And as the industry matured, a lot of different projects came about, DeFi protocols, DeFi exchanges. We had crypto art, the punks and everything. But I think that at the beginning, it was a lot more about the real crypto, and Ethereum and Bitcoin, at least in my opinion, are the most important assets out there today.
And what were your use cases? You're in either Latin America, South America, you're seeing some of the probably, when I started getting into crypto 2017, everyone was talking about banking the unbanked. So I'm assuming if you're in Latin America, a lot of conversations are going on talking about how to, reduce hyperinflation, how to make transfers around the world. remittances. Tell me about some of the use cases that were going through your head when you first started learning about Ethereum.
That's a great question. So actually, I'm from Honduras. I was born and raised there in Central America. And Central America has a very interesting characteristic where as a percentage of GDP, we receive around 20 to 30% of GDP in remittances. And a lot, like the majority of those remittances today happen through carriers such as Western Union that charge you hefty fees. At the moment, back in 2015, 2016, when we ran the numbers, we're looking at around 8 to 10% per transaction on an average transaction. Yeah, average transactions are about $120. And what we realized was that a lot of these people it would make a huge difference if they could get their money faster and avoid that fee. And we saw crypto as the opportunity to enable that. Now, when you're looking at it, it sounds very magical on paper and it works, but how do you turn that crypto into an actual asset or a value of exchange in the country of the recipient? You require off-ramps. And for those off-ramps to happen, you require liquidity, which becomes a problem in order to actually solve the remittance equation. I think that there's players that are coming about to that, but at the moment in time, what we're looking for was how can we use and leverage crypto to enable like 20 to 30% of the GDP of these countries to come through without the fees that they're looking at and without the delays that they're looking at in that moment.
And I think you bring up a great point, especially if you're around since 2017. It's not so much what the regulators are saying. It's really the banks that are the de facto regulators. The regulations can give you a list of requirements, but if you don't meet your bank's risk requirements, you're not going to get bank accounts. And we don't realize how much we rely on the traditional banking networks in order to facilitate crypto businesses. I think many of the disruptors, I remember crypto was supposed to disrupt a lot of companies. They were supposed to disrupt the banks, but they forgot that you need the banks in order to operate your business. So to your point, it's great to have this amazing asset, stablecoin or crypto, but what do you do to implement it into real life? That's where it gets a little bit tricky, especially I'm assuming in places like Honduras that I'm going to assume that weren't on the leading edge when it came to crypto regulation.
No, they were not at all. And you're totally right. We actually launched a pilot in Honduras in some Circle K's, and we were allowing some specific individuals to receive remittances. This is not with DEUNA, this is prior. And when we tried to scale the project, we realized that we really needed banking institutional support. And that's when they told us, we don't like the KYC and AML aspect of it are very high standards with all reasonable expectations, to be honest with you. And that's where I went into McKinsey, back to your original question. I went into McKinsey with the purpose of becoming a digital payments expert and earning the reputation as well as the relationships with the institutions that I needed in order to be able to enable that project. However, that didn't happen because of different topics of life, different things in life that led me to found DEUNA, start DEUNA, and grow DEUNA.
I'm curious though, in Stanford, you were in a fellowship, in regards to pursuing entrepreneurship, profit ventures. Now you start DEUNA. Do you remember, that fellowship? Do you remember maybe some of the conversations that were happening back at that time? Maybe some ideas that have turned into real life businesses or projects? Anything interesting or well-known ventures from back at that time at Stanford?
DEUNA was born at the beginning of Stanford. And my co-founder, Jose Maria, was able to grow DEUNA a lot as well, thanks to his day-to-day as I was going to school, right? And I would tell you that during the fellowship, the most important aspect of it was realizing, and at my time at Stanford during my MBA, was realizing that how important it was to iterate with the right customers, with the right merchants, and build around them, build a moat around them. And the story of DEUNA is really a story of resilience over the last 5 years and a story of evolution according to the merchant needs. And that has allowed us to, one, grow to cover over 10% of the online GDP of over 5 countries, a third of Mexico's, and two, be uniquely positioned now to actually drive the future of commerce by allowing us to really enable enterprise AI in a level that has not been seen before. And that all comes back from the my time at Stanford and during the fellowship of all those valuable lessons that you iterate and you build these big businesses by listening to your merchants, by being resilient. And although like it seems like that's on every textbook, once you live it and you realize how truthful that is, you realize how important that advice is actually.
And the one thing those textbooks didn't have is letting you know that there might be a global pandemic that completely changes the game. What was the attitude, the mindset of you and your co-founder? You know, you're launching this business, and then you get that text or email that like, oh yeah, by the way, the world's going to just shut down for 2 weeks, which ends up being 2 years. Was this actually helpful, I'm assuming, to your business as more merchants were coming online?
Very.
Did this kind of support your thesis? Like, these companies need us now more than ever? And was it a little bit scary trying to navigate in such uncertain times, especially when it comes to things like funding or VC-backed money?
That's a great question. I'll give you a very high-level summary. In March 2020, the pandemic hit. I was still in McKinsey when it did. I left McKinsey because my family is in the fast food industry and our revenues dropped 80% overnight. We had to start firing people like about a month or 2 months afterwards because the government wasn't allowing Honduran fast food restaurants to sell online. And my family calls me while I'm at McKinsey and they tell me, we know that you've led different large merchant digital transformations. We need your help. This is what's happening. And the remaining 20% of the revenue was all allocated, not in store, not online. It was allocated to third-party aggregator and marketplaces, delivery apps. And they were charging us a hefty fee because they knew that we didn't have an option. So when we started DEUNA, we started it in April 2020 with Jose Maria. Jose Maria's family is also going through a very similar moment in time. We decided that that was enough, that we didn't want to patch it, that we actually wanted to level the playing field for any merchant worldwide to be able to compete on an equal footing with the largest players out there. Because otherwise, they were all going to get disintermediated by the marketplaces, by the aggregators, by the delivery apps. And we wanted not that to happen. Like, we wanted them to have like the tools and the toolkit to actually be able to have a chance. And we started that in April 2020. So the pandemic was actually a huge driver in terms of digital adoption in the region, which did definitely help us, both in terms of enterprises realizing and merchants realizing that they really needed to make the investments, but also in terms of consumer behavior changing totally into online permanently after the pandemic. It didn't just happen during the pandemic. That's where we started. How did the pandemic influence it? There was higher adoption. There was a higher need and a higher urgency. And those early relationships in multiple countries, outside of my family, by the way, like these are real customers, they enabled us to build a level of trust that is unparalleled with any player out there in the payment space. That has allowed us to build over the last 5 years different evolutions of the product that have led us into how do we leverage all of their data for growth, and how do we leverage all of their payment data to unlock different revenue opportunities through AI. But I would tell you that the pandemic definitely drove higher adoptions. It drove a higher need and a higher urgency, which allowed us, well, even at Stanford, to have a niche and a PMF in Latin America, which is why we prioritize that region. Now we're focused on the US. We already have a lot of Latin America. And at the same time, it allowed us to cement the foundations of those relationships that led to trust, that led to us being able to listen and work with merchants to build the future of commerce.
And there's that loyalty. It's just like, whether it's jiu-jitsu or running a marathon, there's that when you struggle with others and you come out the other side together, there's that loyalty, that camaraderie, that like, hey, we made it. We got beat up, but we made it. So those companies must be extremely loyal to now your brand, and you've all been through the trenches together. I'm wondering, can you remember that one client that you're like, you're going into the meeting, you're talking with your co-founder, you're like, hey, if we land this one, this is the one that we can leverage in other conversations. Do you remember that, whether it was a meeting or a conversation or that get off the phone or signing the contract? Do you remember that?
There's a couple. And the business has evolved several times. And every time it has evolved, it's a step function evolution, if you want to call it that. I would tell you that the first one was the largest franchisee worldwide of fast food operations in many, many countries. There are partners. And that was the first and earliest one where we earned the trust of a very large company and a very publicly traded company at that. And that was very early on in our journey. That was back in 2021. After that, we struggled because for several reasons, but we started DEUNA with the vision of leveling the playing field. And our first iteration of the product was this one-click checkout, which is the basis of everything that we do today. Now, what we realized was you can't go tell a company just to change their checkout and get prioritized and monetize their existing users. One. And two, we also realized even that even if that were the case, they all have different partners in terms of fraud prevention, in terms of acquirers, gateways, processors, PSPs per country. And if you really want to power their checkout, guess what? Those providers don't get integrated magically. Like, someone has to do that work. And so we built very, very advanced and flexible payment infrastructure that became the key to unlocking even largest merchants. And so the first large merchant that we unlocked in 2023, and we were like, if we win this one, this is the second or third largest movie chain worldwide in over 25 countries. That will definitely allow us to build the future. And that's what happened. And we were in a moment, in an inflection point back then, Stephen, where we were going through a very rough journey and we weren't hitting our objectives. We actually decreased revenue after our fundraise for the first year. And I was going through a very tough personal part. Like, I had a very long-term relationship end. And like, I was meeting with my investors and they were telling me, like, make a bet the whole house on a 2-year plan. We trust you and go for it. And the movie theater, I'm telling you, was our first large merchant after that message. And it really cemented the future of what we were about to do. We didn't know it at the time. Instead of decreasing revenues by 7%, we grew the company over 24x in the last 12 months to 24 months. And yeah, we went from less than 1% of the GDP of Mexico to about a third of it right now.
And not too many entrepreneurs, they come on this podcast and talk about the failures. Obviously, they don't want to talk about their wins. Is there any, advice that you can give someone that's going through? Obviously, I think anyone that's an entrepreneur that's building a big business is going to both have professional and personal things that get disrupted. How were you able to power through it? Was it, because you had such supportive investors? Is it because you had maybe a co-founder that was able to help support you as well? Can you walk through any advice you give to people that obviously are going to be struggling at some point in their entrepreneurial career?
Totally. And in that regard, I would tell you, Stephen, that first of all, entrepreneurship has a lot of highs and lows, and the grass is always greener on the other side. It's deeply romanticized. Like, it is. Like, everyone tells you that they want to be an entrepreneur. My co-founder and I have been through a lot over the last 5 years, and we come through it and we come on top. But that's not always the case. I would tell you that 9 out of 10 days you're getting hit in the nuts and like there's nothing you can do about it. And then the 10th day, it's all worth it. And that reminds you of why you're doing this, of your mission. And like, a lot of like very famous entrepreneurs will tell you this, that like you really have to be in love with the mission of what you're doing, because otherwise the likelihood that you're not just resilient enough or that you're going to have a crack or a weak spot here or there is too much. And like, unless you really believe in what you're doing, unless you're able to get your team to really believe in what you're doing, to go through those 9 days, to go through those 2 years, those 2 bad years where you can make a bet, a long-term bet, then that's like, that is key for entrepreneurship. So I wouldn't recommend a lot of people to become entrepreneurs, to be honest with you. I think that a lot of people really need to think about whether they even want the price at the other end of it in the first place, because like it's it's a long, much longer and tougher journey than anyone imagines at the start.
I always say there's easier ways to make money, but this is the best way to make impact. I'm curious though,
That is totally
as
true.
you're looking out, what was your existing clientele customers doing before DEUNA? I'm assuming it was a lot of patchwork, or were you the person that took all that patchwork and made this seamless integration so they could have, the one-click checkout so they can maximize their payment? I think what you said at the start of the conversation really resonated with me, is that you're turning payments into a competitive advantage and a revenue generator, where most people are just looking at it as like infrastructure to get the thing done as fast as possible.
That's a great question, Stephen. So let's talk about large companies, right? On airline, they work in many, many countries. So the first aspect of it is like, how do they connect all the different providers, right? And how much effort does that require? Like, you have different banking providers in terms of credit cards and debit cards in each country you operate, but you also have alternative payment methods and fraud providers in each country you operate. So that becomes a hassle, one, to develop and integrate and prioritize, two, to maintain. Like, there's also maintenance. All these providers have different updates over the next few months or the next few years. And it's not the merchant's job, in my opinion, at least, to be handling all that legwork in terms of the connections and the maintenance. That's one. The second aspect of it is, how do you make those connections more efficient? They have to be dynamic and flexible. How do you route in order to lower costs? How do you route in order to increase redundancy and increase conversion rates? Which payment methods do you show first? Like in the case of a specific user, maybe they're always buying with ACH, and that's much cheaper than credit and debit. So the second aspect of it is having a dynamic and flexible orchestration and advanced payment infrastructure engine to allow you all that flexibility. The third aspect of it is, okay, now that you have 100% of the transactions of a business going through you, what are you going to do with that? Right? You either get commoditized and you're just building fiber networks out there, or you turn that asset into something that actually can drive and change the business. Because payments, at the end of the day, Stephen, is like the airport. You can't get on a plane without showing your passport or your ID, right? The same thing with the checkout. You have to identify yourself. You have to tell them and where you're flying, what you're buying, who are you, everything. But businesses today don't have all of that data in one single place. It's all siloed, it's all fragmented, and they spend weeks just to piecemeal together payments data. Let's not even talk about marketing data or any other type of data. Like, they take weeks, 2 to 3 weeks to piecemeal like different types of data for payment optimization. And that's broken too. And so I can tell you that, like, we're leveraging that aspect of it to really drive the growth, and we can deep dive there as well. But yeah, like, in terms of the one-click checkout though, that's on the infrastructure side. In terms of the one-click checkout, that builds on the third aspect that I just mentioned on the latest one, which is the checkout allows us to identify our users and allows us to extract up to 600 and almost 700. I think it's 628 or 658 data points per transaction today for the merchant's use, not for our use, but for the merchant's use. And the only reason why we can do that, and no other payment infrastructure player can do that, is again because of the original story I told you about. We started with a one-click checkout. We evolved the one-click checkout to have very advanced payment infrastructure because we listened to our merchants and we're resilient. Now, the one-click checkout also allows us to drive a lot of value for our merchants, because think about it. Once you have over 10%, and in the case of Mexico, almost a third of the online GDP of the country going through you, you have very unique insights into whether Roberto has committed fraud before. I can't tell you where, but I can tell you Roberto has committed fraud, or that Roberto is a certain type of buyer and maybe you want to upsell him X instead of Y. And so the one-click checkout it became a critical aspect of how we can turn payments data, enrich it even further, and turn that through AI into a revenue driver.
And I think that's so important. I think I saw a little bit about what your checkout looks like. And if I'm Steven and I love using, maybe PayPal, I love using certain credit cards, giving me an option for Alipay isn't going to be helpful. But with the data insights you have, you can almost customize that checkout for the type of person based on their behavior. And when you think about it, let's just say that improves the payment process or improves, the sale by 3%. When you're working with companies that are doing billions of dollars, that is a huge upsell for them. So that's how you're creating revenues, like really customizing the experience for customers so that they don't fall off, so that they don't, to your point about the airport can also be very frustrating. And I think if people didn't have somewhere to go, many would just walk out and go back home. And that's where, a lot of checkouts have been frustrating. And you're kind of like almost creating this experience for people that not only makes them feel heard, it's like, hey, you know what? I wouldn't mind doing buy now, pay later. And, that is something based on my, paying or my transaction history. So I think that for people that are listening and being like, okay, one-click checkout, how big of a deal is that? Those percentage changes, those, revenue capturers can be huge for a business, much less, small companies, to your point, where if they're charging 10, 20% per transaction, that's a huge amount for micropayments.
Totally. And Stephen, there in that regard, like the reason why, think about it this way. Yeah. In the US, have you experienced Shop Pay, or in Canada?
Yeah.
Like Shop Pay, Shopify's checkout. So that's very easy to pull off because they force almost everyone on Stripe. There's one vault, one processor. When you're dealing with multiple payment methods in a lot of different countries with a lot of different acquirers and gateways, there's also a lot of fees that can be saved for these billions and multi-billion dollar volume companies, because the optimization doesn't only improve conversion rates, but to your point, it can improve fees. So like if I already know Roberto is a user that has previously bought with ACH, can they buy with ACH in this country? Yes. Okay, perfect. Can I enable that as the first payment option? Yes. You save 120 bips. That's a lot of money for the largest companies.
I see. On because if you're only giving them one option, those fees start to add up. If that's not their regular payment, if that's not the best payment gateway they should be using, they're going to pay for that, right? So you're giving them the optionality that's actually affordable or more inexpensive or less inexpensive for them.
Totally. Yeah.
Talk to me a little bit about Athea. So you create a platform that's powered by AI and agentic payment intelligence. First of all, maybe you can just give us a high level. We hear so much about agents and agentic. What is agentic payment intelligence?
That's a great question. So we built a reasoning engine, and a lot of people have talked about how AI is going to enable humans to perform a lot of outperform themselves compared to their past, and perform even better in terms of expectations and detect opportunities. Now, in order for that to happen, that AI really needs to be adopted in the right way and onboarded in the right way into an enterprise. The problem with that is that 92% of projects in a enterprise AI are failing today. This is according to MIT, this is according to Gartner. There's a lot of research on it. And the main reason of it is because a lot of companies have data. They do have data. Now, it's not AI ready data. And that's the biggest gap, Stephen. That's the first big gap that we solved because of the checkout and because of the payment infrastructure. The second gap is, okay, let's say that now you have that data. Can the AI answer a question? Very likely you can get it to answer a basic question. What were my sales last week? Yeah. But once you start to deep dive, hey, Athea, identify revenue opportunities in X countries for these processors, analyze the fraud chargeback rates and compare it to the network fees to avoid any additional BIPs penalties by the networks. Can your ChatGPT connected to the database do that? No. Can you ask it, Athea, segment my users by LTV, lifetime value, or RFMO, recency, frequency, and monetary order value, and analyze trends in order to increase sales for these segments? Can it do that? No. And so the question then becomes, how do you turn all this data into complex and actionable insights? Not basic dashboards or static dashboards or dumb questions that your analyst can answer that you already have a dashboard for. But how do you really identify revenue leakages in real time? Not 2 weeks after the fact when your report finally gets consolidated and you're like, oh, this country's having a problem. No, in real time. And so in order to do that, like agentic payments intelligence, how we define it is first being able to extract the data so that it is AI ready ourselves, or connecting to our data sources, pre-processing, cleaning them, et cetera, in real time. And then feeding it into a multi-agentic system that can think like your team would. Now, Stephen, this is very important. We're not talking about a plug and play here. We don't overpromise and underdeliver. We do the opposite. But in that case, like a lot of companies are telling you that they're trying to do that. Now, what we do is we adapt the reasoning engine during onboarding, which takes 2 to 3 months, to your KPIs, to your context, because an airline can think about acceptance rate and conversion rate very differently than a large retailer or a large telco. We work with all of the above. So that's the issue that, like, not the issue, but that's something that we've had to solve so that really, like, Athia can add value to an airline, to a telco, to a large retailer in a myriad of ways, to their own context, to their own KPIs, and to start to think like their team would. Because otherwise, their team has to be looking at 100 plus countries, 9 processors overall, different merchant IDs per country, and tracking everything in real time. And that will drive you crazy. Instead, this tells you what matters, why, and what to do about it. And in some cases, it helps you do that for you with your approval, of course. Like she doesn't run around by herself at this point, at least. But yeah, that's a little bit as to how we define agentic payments intelligence.
I think 2 things resonated really well. I can see why companies trust you because you lead with like, hey, this is what we can't do right now, or this is what we're working on. Where to your point, especially with somebody with consulting experience, it's easy to sell the vacation, right? Like, hey, like you can just absorb the hype that the company has and say, we can do this and we can do that. And I think to your point, what we're realizing is a lot of these agentic AI solutions aren't doing what they say they're going to do. And this is, it's kind of like the early blockchain days, right? Every blockchain was going to solve everything until it didn't. And then, the consultants all turned into AI consultants and kind of left the industry. But I think that's really resonated because I think this is what we need to do. We need to set proper expectations. The fact that you said that this could take 2 to 3 months, I don't think is, a negative. I think most companies are like, someone that's actually taking the time to learn what our business needs are. So it's actually intelligence versus it being reactionary data, right? They don't want to know that their payment slippage or they're losing money on fees 3 months from now. They'd rather take 3 months to build out something that can measure that in real time, so they're not actually losing money, which I think is important. And I think you've uncovered a big thing with this industry is like everyone's trying to say, like airport example, like, hey, I'm going to use an AI agent to find me the cheapest flight and just book that flight using stable coins. And it's like, yeah, it could do that until it gets the wrong dates, until it doesn't click that it wants a refund or is eligible for a refund, until you go to check your bag and realize that it got you the cheap seats on the flight. And now you can't bring a check bag and you're like all these things are those exact reasons why what makes the airport and, booking trips so frustrating that these agents, I don't think have exactly been able to figure out or at least navigate or in the works of doing so.
I agree with you entirely. And what you're describing is a lot as to like the purchasing aspect of it, like how does agentic commerce work? Although we're talking to some merchants about that, what I'm talking more is how do you productize a Palantir, Stephen? What does Palantir do? They send forward deployed engineers to your company. They connect all of your siloed in, fragmented data. They clean it, they pre-process it, they connect it to their ontology layer called Foundry. And then they train a machine learning application on top of it. Let's call it demand forecasting. That takes about a year. And then they sell it to you for dozens of millions of dollars, right? What if I told you that your checkout is the key to doing that in 2 to 3 months? That's what we're after. That's what we're doing already with large merchants. And that is what very large US merchants are about to start doing with us in the coming months.
I love it. Is there any unique use cases? I think when you have all this intelligence and data, it's not just helping your clients. You're probably seeing some unique business use cases for not just the clients, but you as an organization that you could probably be like, hey, we should focus right here. This is the type of intelligence that companies are really looking at. Is there any unique things coming out of the data and the intelligence that you've been seeing as you're onboarding some of these companies?
going back to fraud. So, like, because of the exposure that we have to the country's online GDP, we're starting to see the same fraudulent device fingerprints or the same fraudulent addresses or email addresses come up in multiple merchants. So it came up in one of the movie theaters, one of the two largest five out of the five movie theaters worldwide, that 20 accounts were like having weird behavior, right? And then we analyzed the network that same like hour, and we realized that there was exposure on one of the largest pizza chains, on like two large retailers, on one large telco. And we're like, hey, we're not gonna monetize this right now, but let everyone know ASAP. Like, and that is one of our values. We're merchant centric, and we're willing to bait in the long term. So, like, those are some interesting use cases that honestly are arriving earlier than we thought they would in terms of insights from the network. That is very valuable. That's one. Two, I would tell you that there's a lot of people that have tried to buy the data, like networks, ads, like the largest scalers you can think of. You can imagine who I'm talking to.
I'm shocked that marketers would want access to that data.
We're not selling the data. And like, that's what I've told everyone. And the idea is that we give that data in the form of actionable insights back to the merchant. And that's the real purpose of Athia. Now, can we learn from it? Yes, 100%. Can we share abstracted insights that help everyone in the network? Yes. And that's something that we're starting to do.
That makes a lot of sense. Someone, I'm a blockchain investigator, crypto compliance. I've done AML for banks. And one of the things when it comes to fraud is exactly that. A lot of the reg tech companies are really great, but they focus on a very subset. So if you're only focused on how to do, compliance or reg tech or transaction monitoring for crypto exchanges, you're only seeing a portion of that customer activity, whereas what you're seeing is like, hey, this movie theater, the people that are ordering the food, there's all this fraudulent activity that could be maybe the same organization or the same exploit. I think you have a lot more range and data that you're seeing into other areas that maybe these individual reg tech products can't see. So you probably have a lot of advantage where you have this kind of like holistic view. And I know we haven't even got to stablecoins in depth, but I think as we start seeing like stablecoins like Tether and USDC, they have a responsibility on onboarding. But once it gets out into those secondary markets, there's kind of like an ecosystem risk that you start to take on of what are the criminals doing. So I think that data that you have and that ability to see holistically, not just maybe from the crypto side in the future, but also the traditional side is going to be huge.
Totally. And like, if you think about it, like a lot of the fraud providers out there that you've worked with depend on what data the merchant is sending, which is not a good thing. Two, they depend on like the amount of transactions the merchant is sending. In some cases, they don't send 100% of the transactions. They send the highest risk transactions, right? And the third aspect of it is even the payment wallets, like let's all call it a PayPal, they only see the PayPal volume for that merchant, right? They will see PayPal volume across merchants, yes. But in our case, we see 100% of the transactions for all the business, and we extract the data ourselves. We device fingerprint ourselves. So that allows us to feed all of that into an agentic intelligence platform like Athia, and she can start to think for you. She can connect the dots across systems and fraud and operations and marketing to deliver those insights without or with a lot of context. And it allows your payments to start thinking, right? Instead of handing you raw numbers or an Excel, she explains what is happening and suggests actions. If you need to analyze acceptance rates by country or provider, she drops the full playback in seconds. She'll flag those vulnerabilities that you're talking before they become losses, right? And before those opportunities slip away, not 2 weeks from now, but actually in the moment. And what we're trying to do here is not to replace teams. No, not at all. We're trying to empower teams and to allow these teams to actually have access to all the data so that they can act on it in real time.
Well, we can't talk about agentic payments or even payments now or the North American market without getting into stablecoins. What are your thoughts about stablecoins? I know probably once you to say have an episode like this, I'm sure there's going to be a lot of stablecoin issuers knocking at your door to to integrate with the distribution and the ecosystem that you've built. What are your overall thoughts on stablecoins and where it fits into DEUNA in the future?
That's a great question. So again, we're merchant centric, one, and two, we're very focused on the long term. Now, the reality is that we do have the checkout on the largest merchants in a lot of different countries in Latin America already today, and starting in the US. Now, how can we enable distribution, which is the key aspect of stablecoin usage, which is preventing massive adoption, that we can enable very quickly? How? We have the relations with the merchants. We own their checkouts. Like, of course, we can't enable it without them, but like we can set up those relationships fairly quickly in order to enable stablecoin acceptance in these checkouts, seemingly in a couple of days. And we've been approached by some of the largest stablecoin providers out there, especially because of Mexico, and that they're looking in order for their stablecoin to be the one that gets adopted by the merchants. And in that sense, like, we will be able to work with one of them when the time is right, when the incentives are aligned, and when the merchants really need it. Right now, like, the merchants are not pushing for it, and we're a merchant-centric org, so we're going to push for whatever adds value for the merchant. Now, because of my roots, I am I'm very big on crypto, and I really believe in the future. So I would tell you that it's going to happen sooner rather than later, that we actually go into the stablecoin play and we enable stablecoins for a lot of these merchants so that it is widely accepted. Which one? I can't tell you right now, at least, but that it will happen in the next couple of years.
How could you be a consultant? You're supposed to push on the merchants when they don't know what they want. You're actually listening to them. And I love that, right? Everyone's trying to push stablecoins because they know that will start a conversation with a lot of these merchants where you're like, hey, when it's their time, they'll come to us and we'll already have the relationships already with some of these stablecoin conversations to implement. I'm curious.
Totally.
On your website, you have something called incident response, where it's incident simulation, where you can like test, the client's security policies and correct vulnerabilities. Can you talk a little bit about this? Because that seems almost like in the traditional cybersecurity world, almost like pen testing or creating, even in crypto, kind of like the beta side of before you go on the main net, your test on the test net. Can you tell me a little bit about your incident simulation and how companies are using it?
So in terms of incident simulation and response management, like we take very seriously everything regarding security, right? Like especially with the amount of volume that is going through us and the amount of data that is going through us and the trust that represents in terms of our merchants. So we take that very, very seriously. In terms of like what we do in those aspects, we allow merchants to analyze, and Athia plays a role now. It didn't before, but now it's starting to play a role to analyze what if scenarios in terms of different rules that they can enable for transactions to go through or not. That is one aspect of it. Another aspect of it is what we do in terms of internally, which is related to like all of our cybersecurity certifications, our pen testing. We do that on the regular. We're very strict about that aspect of it because of what it can represent and how much trust it can erode. Like, Stephen, trust requires years to build, but it can be destroyed within minutes. And we take that very seriously. We didn't work our asses off for the last 5 years to drop the ball one day out of nowhere. So in that regard, like, we take it very seriously, and we allow merchants to, one, test the rules that they're doing with lower volumes. And also we are very enterprise grade in terms of what we do for cybersecurity certifications. What do we do in terms of rollouts? How do we do our rollouts in which countries in terms of percentages of volume, et cetera, so that we can guarantee that what we're doing will not erode trust.
And I think that's attractive to a lot of, especially merchants where they're new to maybe some of this payment technology, that they can actually try it out a little bit, see how it reacts. Because once you turn on the switch, once you do all the transactions, it's kind of hard to turn it off. So you have to kind of see what it's going to look like. I'm curious, as we get into Q4 here, in what seems to be a lot of momentum, especially now you're in the US with payments, infrastructure, mergers and acquisitions, stable coins, digital assets. What do you, AI, we're seeing conversations at the White House with some of the biggest AI leaders in the industry. What are your thoughts about where the payment industry goes in the future, especially out the next few years when it comes to AI, payments, and even crypto?
You want the solid truth?
Yeah,
I
where do
think
you see
payments
it?
is
Right,
gonna.
you have your
I think
probably
it's gonna
personal
get
views and you have your
increasingly.
industry views.
I think it's gonna get commoditized much faster than the players in the space are looking at it. At the bottom of it, we're a checkout and an orchestration company, and we're driving commoditization of it, like to a certain point. But the industry is also driving commoditization of it, and stable coins are definitely driving commoditization of the payment industry as we know it. So in that regard, Stephen, I can tell you that I don't know if it's going to take 2 to 5 years, but payments will be less of a money generator for payments companies. It will become more of a value-added service play, and you're looking at that already with an Adyen or a Stripe, for example. Like I'm not saying anything new, but I'm pointing out the drawings on the wall that no one is calling out. But like some of these players are going into non-acquiring solutions. They're enabling you to sell, or like they're enabling parts of their infrastructure, even if you don't process with them, right? And so that is starting to tell you that something's happening and something's changing. A lot of these companies are also buying stablecoin providers or stablecoin infrastructure providers, right? So they're seeing the drawings on the wall here, like, and they're acting on it. Now, why are we uniquely positioned in that aspect is we made that bet years ago. We don't drive our revenue from payments. We don't process. We're not the merchant of record here. We connect everyone. And by being the connector of everyone, we are seeing how important it is to actually drive those value-added services in the sense of reconciliation, subscriptions, the basic ones, 3DS, network tokens, account updater, all of those. Those are very important. And I think that those are going to be the value drivers in the payment space. Now, that is not even our bet. Our real bet is all of that payment infrastructure that we built already is really a Trojan horse to earn the trust. And once we have that trust, we can show how we can add real value, not through a 3DS or a network token, but real driver in terms of actionable insights that become the growth engine of the business. And I think that as more and more time comes along, what will happen is that the importance of complex value-added services will be larger, especially for the payment players that you see today. And AI and stablecoins are just going to drive that faster than anyone can see it coming.
Do you see this shift like you see about like Tesla and they're like, oh my God, the cars. And it's like, well, not really. It's the data, right? If Tesla's tracking all your movements, where you're buying it, same thing with Uber. Do you see, and now we get into payments where it's like, okay, we're making a margin here, but this data is almost more valuable than the payment infrastructure. Do you see more of these companies moving into like monetizing just on the data alone because they've already built that infrastructure, the relationships, and now they have all this consumer data? Especially with AI, right? We're just gonna ask the AI, what's the best way to get to here? Where's, what am I? AI is gonna tell us what we're probably gonna. We already see it, right? You go in your car, you flip on your phone, and it tells you where you should be driving based on the last 5 times you got in your car and drove there. Is data going to be the monetization, and all these other services, to your point, just going to be a value add?
There's two aspects to your question. The first one is I'm going to go straight into it, and then I'm going to answer the second part of it. But the first one is, according to your example, these companies already know your 5 last destinations and they can give it to you, right? There's the first aspect of it is the type of company you're talking about. If it's a consumer company, then they'll probably try to monetize the data, right? Like consumers become the product. In our case, that is not true. Like in our case, we work for the merchant and the data is for the merchant's use. And yes, we can leverage the network for the merchant without telling you how we got that information.
Right.
So it's abstracted out. In that case, like some of these companies that are more consumer oriented might decide to monetize the data. In the case when it's enterprise, like let's forget about DEUNA here. Let's call it your ERP. I don't think your ERP should be selling your data, if you ask me, right? The second aspect of it is data is a moat. The fact that they already know your last previous destinations allows them to offer you a different user experience. And that compounding over time with AI, that will be a differentiating factor that will allow these companies to monetize in more ways than just selling the data. And that is what we really believe in. That's a data moat. And the capabilities that we have today, Stephen, we wouldn't have if we hadn't gone through the journey over the last 4 years, onboarded billions of dollars in payments volume, multiple, like large portions of the online economies of several countries. And now I can tell you that we have the capabilities and the right to win because of that moat we built. And I think that just like we experienced that, there's a lot of other companies that are going to start experiencing that or already experiencing that, because data will allow you to build capabilities that cement your position and differentiate you.
That's beautiful. This was such a great conversation. Any exciting announcements? I know, you and the team, or at least the team, will be at Money 2020 in Las Vegas by the time this airs near the end of October. Any other announcements coming from the team?
There's a couple of new hires in the US we're not disclosing at this moment, but they're going to make a splash for sure. Very veterans in the payment space. And we're also opening our offices in New York. So yeah, we'll be at Money 2020. I can tell you those 3 announcements.
I love that. Maybe a little entrepreneurial insight. What do you look for, right? Because you're building something where trust and, relationships is huge, but you're also an entrepreneur. You need someone a little bit entrepreneurial to navigate the US or any market. What do you look for? Someone that's more of an entrepreneur and builds things? Like everyone's using this like recent, I think it was Starbucks, like the CEO didn't have any entrepreneurial experience. He lost $40 billion. And then the next CEO, got $20 billion in valuation overnight because he was an entrepreneur and an operator. How do you manage those two things when you're building the type of business where, data is a moat, you need entrepreneurship, but you also need someone that has significant, respect and trust in the industry?
That's a great question. So I think that a lot of it is personality. You can't teach personality. And I've learned that the hard way, by the way. Experience is very important, and that's why it took us a long time to make our first hires here in the US. Like in terms of go-to-market, we have team in terms of payments, products, etc. in the US. But in terms of go-to-market, now that we're like already starting to work with US merchants, what we were looking for was very specific personality traits that are drivers for accountability, for being hands-on, for earning that trust, and more importantly, for having those references that in the past they haven't overpromised and underdelivered. And some of the Fortune 50 companies in the US sent referrals for the people that we hired, and that gave us a lot of visibility also as to, okay, these are veterans that have the personality traits. We filtered for that, but they also have the trust, which for us is the most important aspect of anything we do. We can't lose trust.
That's amazing. Where can people find you, Reks? What's the best place? I'm assuming you do a little LinkedIn, maybe a lot of Twitter in the payment space, maybe a little crypto Twitter on the weekends. Where's the best place for people to find you?
We're doing more Twitter nowadays, starting to do more and more Twitter. I had to change my account from the crypto days, so you're not going to find a lot of me, or maybe you will.
Yeah, not share some
Twitter
of the
or
NFT tokens that you're in the hole for.
Yeah, for sure. Like there's a couple of those. But no, Stephen, Twitter or LinkedIn for sure. And like we're definitely around in Money 2020. So if anyone wants to meet in person, like myself and the team will be there.
Awesome. And, a little exclusive, we might be out there too for the Around the Coin and just me and the team personally. So it'll be great to meet in person. Thank you so much, Roberto, for this conversation, being so honest about the payments. Like we have, this podcast is mostly for the payment tech crypto person. And you were really honest about the realities of what we're dealing with. Not over-promising, I think, is a huge one. And just over-delivering, I think, is going to be important, especially when we start coming into the buzzwords like agentic, payments, intelligence. I think you really level set what the industry should expect. It's not going to happen overnight. Even when you're building with your merchants 2 to 3 months of really learning what they're doing and what's the exact data that they want. I think is going to be very important going forward in this industry.
Totally, Stephen. I think that is the most important. Listening to the merchants, building the pieces so that you can act quickly whenever they do need it, and having that foresight, but like doing the prioritization according to their needs and wants. And that's something that we've done. I think we're uniquely positioned to take advantage of any stablecoin movements, and there's a lot of them already talking to us. We need to choose a partner right now. And the second aspect of it is on the AI side. Like, yeah, it's not about enabling AI to tell your CEO you enabled AI. It's about driving outcomes. It's about driving value. And that's why 92% of the companies are failing. They're over-promising and under-delivering in terms of project implementation. We were able to build Athia for over 2 years. So we tested all the outputs before we took her to market. And just as of last month, we started signing our large enterprises for the first time. Like, we hadn't taken her to market publicly. Now we are onboarding right now full, real, unique, different merchants that we weren't working with before.
I think that makes sense. Yeah, and now have an actionable use case that you can show people. You can show where the challenges were, what the challenges, versus like, we've built something, now let's go test it out with new customers. I think that's important and what adds to the trust. Roberto, thank you so much for today's conversation.
Thank you, Stephen.